Hey everyone, this is John Howe speaking, and in today's video I want to give you some really good high probability bars to look for if you're looking to trade the market, say 1 to 5 days, if you're looking to get into a trade for 1 to 5 days, or even if you're looking for a really nice high probability entry level to hold on for a couple of months even. I want to show you some really good couple of bars to look for, even if you're looking at candlesticks. I can cover that as well, but we're going to look at some bars and what to look for. So when we're looking at the chart, what I have right now is just simply an open, high, low, and close bar chart. Okay, just that's what I simply have here. And as you can see, we have some bars. If I open this right up a bit more, okay, you can see some bars open, and we have some big bars through here. Let me just bring this over to candlesticks now, so we can see a bit more visually. And as we can see we have some big solid red bars. We have some small bars. We have some up bars, and so on and so forth. But the bars that I personally really look for when I'm looking to trade from 1 to 5 days, so to speak, the bars that I'm looking for are what we call bearish down or bullish up. Now the reason why I look for those bars is because it shows confidence in the market. Now let me show you what those bars look like. Let's just go to open, highlight, close again, and let's just zoom this in a bit more. Okay, and let me show you what it looks like. A bullish up bar really gives confidence in the market likely to continue in that direction. Okay, now let me show you what I mean here. Let me show you this here. And what we have on the chart right now, I'm going to give you an example on the chart. What we have is when a bar is bullish, okay, when we talk bullish up, when a bar is bullish, it simply means this. When the bar's open, the market's open there, the market's ran down, the market ran back up, and the market closed there. Meaning that the market or the day for that bar opened in the bottom 1/3 and closed in the top 1/3. Meaning this is a bullish bar, okay? But what makes it a bullish up bar, it needs to be determined from the bar previously. Okay? So when we're looking at, say, for example, let's just take that off the screen. When we're looking at, say, this bar here, for example, you can see right here that it opened at the bottom and it closed right at the top. That means it's bullish. Let me see if I can squeeze it in a lot more so we can really get a good look at it. Okay, so as you can see, this bar right here, we can see that it opened right here, it went right up, and it closed right there. That makes this bar a strong, solid, bullish bar. But what makes it bullish up is you can see from compared to yesterday's high, or yesterday's bar high, to compared to today's bar is actually higher, right? So we have a higher high in today's bar compared to yesterday. And we look at the lows, this low here, and that low there. Today's low is actually higher than yesterday's low. So therefore that gives you a higher high in the bar, and this gives you a higher high in the bar. That what makes by having a higher high and a higher low compared to yesterday, just using the high and the low of the range, that actually gives it a up day. Okay, but what makes it a bullish up day is opening and closing, opening here and closing at the top. That to me is showing conviction or confidence that the market's likely to continue. Now you don't want to just trade off that, okay, because what we always do is we always want to stack the odds on our side. So make sure you're using a good trading plan, volume, indicators, stuff like that to stack the odds on your side even further. But what I'm doing here is I'm just giving you some really good solid bars to look for if you're looking to trade, okay? So what does a bearish down bar look like? Let me show you here a bearish down bar. Okay. Let's use this one here for example. Let's use this one over here. We can see this bar right here. Okay, we have the market opening here, so the high, and the market closing here right now. Okay, so we're talking about this bar right here. What do we have? We have an opening in the high, and we have a closing in the low. That makes it a very bearish bar, right? Very bearish bar. But what makes it bearish down is, remember, we always got to refer it to the day before. So what do we have here? We have the high of yesterday's bar. and we have the high of today's bar is lower. So that's a lower low, and we have the low of yesterday's bar and the low of today's bar, in this example, is actually lower. So what do we have here? We have a lower high compared to yesterday, and we have a lower low compared to yesterday. So that makes it a bearish down bar. So whenever you see bars like that, let me flip it over to candlesticks so you can see it a bit clearer. There we go. So you can see it much more clearer now. And as you can see, by having a big solid bar like that, open and closes and gives you a big solid red bar, but is actually a lower high and then a lower low, it's showing a lot of confidence that the market's likely to move down. Okay, so remember those bars. Okay, remember you have the bullish up, which opens and closes like that, but then you also have the bearish down. Okay, so you have the market opening there, market runs up, market runs down, and closes the bottom 1/3. So the bullish up bar is like this. This is yesterday's bar. Okay, so today we have an open in the bottom 1/3 and a close in the top 1/3. Then we have the up bar because it's yesterday's low compared to today's high to today's low is a higher low. Today's high compared to today's high compared to yesterday's high is higher high. This is what we call a nice bullish up move, and therefore we're likely to see some upside. Okay, once again, you want to use some other confirmation, some indicators and stuff like that. But I'm not giving you a whole trading system here. I'm just giving you some tools to look for when you're looking at the market. Okay, and then what do we have here? We have a bearish bar. If we had a bar like that, what do we have? We have yesterday's high, and today's high is lower. Okay, so that makes it actually that's wrong, isn't it? It must be here. All right there. If we have yesterday's bar high and today's bar high here, then what happens is we've now got a lower high. Yesterday's low is here. Today's low is here. So we have a lower low. Okay, that makes it a down bar because that makes it now this is a down day. But what makes it bearish down is by having the opening here and the closing here, which makes it a lot more solid and a lot more likely to go down. Okay, so once again, you don't just trade off this, but I just want to give you some bars to look for because these are really good, strong indications where the market is likely to go. Add some other volume and some indicators and stuff like that, and a good support resistance, and you can have some really good high probability setups just by waiting for those trades. So there you go, traders. Thanks a lot, and I will see you in the next trade, or the next video, should I say.